Markets took a nasty dip this morning with the S&P dropping nearly 100 points, getting down to the lower 6360s after being at 6450 during Friday's trading session. We've got our gamma exposure data filtered by 0 DTE contracts, and throughout the trading session, the 6400 strike was the largest gamma exposure both on the positive and negative side, and so it's no surprise we closed not too far above that level, 6415. And so even as we were dipping pretty far down here in earlier trading, we did rally right back up to the 50-period EMA on the 15-minute chart and just above that big 6400 level. Taking a step back and looking at our daily candlestick chart with our total gamma exposure time frame, we can clearly see the largest gamma exposure concentration is at 6500 outside of the big 6000 strike, but in the near term we see a lot of positioning at this 6500 and 6600 strike. And so in our view, we may oscillate around 6400 for a little bit. We mentioned this in yesterday's video, the possibility to drop into that 6400 level today or tomorrow. And so we certainly got that today, dipping below 6400 before finally closing at 6415. The 50-day EMA is sitting at 6303 on the S&P 500. I think this is going to continue to be an important support level. This rising 50-day EMA we see here, this red line on our chart, and we've got to go all the way back to late April for the last time we really tagged that 50-day EMA level. And so we are getting close here. We could see it tagged in another couple of days, but I'm not personally waiting. I'm already starting to look at entering long positions around 6,400. And if we continue to drop into the 6,300 level or below, we'll keep adding positions into our portfolio as well. We do have hedges in place, and so if there is any kind of market meltdown to the 6,000 level, we do have some protection from our hedges, which is going to help offset a lot of the losses on those long positions. But just switching back to our net gamma exposure data, we're able to clearly see the structure and the skew in the options chain. Obviously, there's a lot of gamma exposure that's going to be rolling off here around the 6,400 level. But as we look up the chain, we're continuing to see positioning up to this 7,000 strike. And again, this is market participants positioning for an end of year rally to 7,000. So we will see dips and bumps along the way, but our thesis is that those pullbacks will get bought at important support levels. We'll see buyers step in. We did see buyers step in today, although it's a little too early to call the bottom, in my opinion. I want to see what trading looks like tomorrow, but ultimately, from a bigger picture standpoint, we do think this trend overall continues to these higher strikes. Turning now to the volatility index, we saw a pretty big spike today, which was met with volatility sellers. We got very close to the 20 level before volatility sellers stepped back in. Ultimately, the VIX closing at 1717. One of the things we've been pointing out on our live stream is how every VIX spike above the 50-day EMA is met with vol sellers, and we really haven't seen any kind of sustained volatility spike above the 50-day EMA since the big spike up early in April. And so since that time frame, we have been in a volatility compression mode, and I think that has the possibility of continuing, especially if we see further vol selling coming in tomorrow and the next day. We could see that compression continuing for several months. In terms of gamma exposure on the VIX, as has been the case for the last 4 or 5 months, we continue to see gamma exposure concentrated between 15 and around the 18 level. And so this, in our opinion, gives further credibility to volatility compression, pulling the VIX down into these gamma exposure concentrations, which is negative gamma exposure on the volatility index options. Next, let's take a look at GLD, the gold ETF. We've been talking about this a lot in our YouTube videos. This is one of our more active strategies in our portfolio, and look at the big breakout. I know if you guys have been watching lately, we've been talking about the 315 to 317 resistance level. Well, that clearly broke today with a big up move. 2.36% doesn't sound like a lot, but that's a big move for GLD in one day, closing at 325.59. Gamma exposure continue growing at this 330 strike, and look at the volume, over 100,000 contracts traded at 325 and at the 330 strike. In terms of how we've been trading GLD, one of our strategies is a weekly income strategy. We actually have a sub-thread here in our community Discord, which, by the way, you can check out for free, link in the description below. But today we locked in $2,410 profit on our short September 5th GLD 315 puts, and we rolled those out to the 325 puts. And again, this is a hedge strategy where we're collecting premium on short dated puts and hedging with longer dated long puts. And so our hedge has lost $4,150, but the short puts that we've been selling have brought in $5,820 just over the last 3 weeks or so. So we've been able to collect nearly $1,700 on this strategy just in the last 2 to 3 weeks. Looking out further in time, our expectations for GLD is to see some consolidation between 320 and 325. I'm not expecting this to go to 330 or 340 in the next few days. I would expect to see some sort of consolidation around these levels before seeing another leg higher, maybe into the end of September. But I do think this 330 strike is likely to get hit in the next 3 to 5 weeks. Ultimately, though, we are starting to now see gamma exposure growing at some of these higher strikes. It's very small at this point, so I want to watch over the coming weeks. Does volume continue coming in at these higher strikes? We see, nearly 50,000 contracts were traded at the 340 strike and the 350 strike, and we're seeing gamma exposure growing at those strikes. And so as long as this positive skew remains in the GLD options market, and as long as we remain above the 50-day EMA, which is all the way down here at 309 at this point, but as long as we remain above that, we're going to continue maximizing our weekly income strategy. And on major dips, we'll look to put on out of the money call debit spreads just to add a little extra juice to our portfolio as well. Next, let's take a look at a few other names that actually did relatively well today. Palantir is one. We've been eyeing this very closely as Palantir is trading right around this 50-day EMA, sitting at 155.22. So we had the big dip from approximately 189. We mentioned this in yesterday's video, now just consolidating around these levels. Gamma exposure is skewed to the upside just slightly. We have a large gamma exposure concentration at the 160 strike, but we see predominantly positive skew all the way back up to 180. So this is one of those names that we are looking at selling premium on. I like selling those 160 puts, either as part of a wheel strategy or potentially a put credit spread for a move back up above 160 in the next week or two. The main thing we want to see at this point is for this low in the low 140s to hold. I think if this level holds and we can maintain some support around the 50-day EMA, I think 160 and higher is likely in the coming weeks. Next, let's take a look at Nvidia. Nvidia down 1.97% today, closing at 170.74. Nvidia is another name that is coming right down into its 50-day EMA, so similar to Palantir, and there's a number of large mega cap stocks that are coming right into that 50-day EMA support. Nvidia also right in its lower dealer cluster zone, so this is an important area in the options market where market participants are likely to close out their put positions and option dealers are forced to balance their books by buying shares of the underlying security. So this could offer some additional support and additional buying pressure below the 170 level. So that's something that we're looking out for. We did see some buying step in today in the afternoon in Nvidia. So we'll see if that continues tomorrow. Gamma exposure is skewed positively to the upside between the 180 and the 190 strike. So this is something that we've been talking about in our live stream with our members, that there are a number of mega cap stocks that are reaching these very important support levels. Doesn't mean we can't go a little lower, but what it shows us is that this could be an area where buyers step in across some of the largest stocks in the market. And if that's the case, we should see those spillover effects into the broader indices. So this is an area where we're also watching very closely on Nvidia, and we're looking at potentially putting on some positions for a potential bounce up to higher strikes. And you can get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies by becoming a member at geeksoffinance.com. Members also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and ideas. And you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.